And a very good morning to you, and welcome to look at the markets starting to move already. Wow, that's a big turnaround all of a sudden. Something's going on in the background here. Maybe some intervention by the uh, the uh, the BOJ. Let's see. Anyway, I'm Andrew Horowitz. Welcome to the TriggerCharts pre-market rundown. A big move off of the bottom, just what we saw a minute ago. 75 points over here, 120 points here. Gold is starting to move up. That's what I'm thinking. Let's check this out and see what's going on, and then we'll get to a few things. Let's see. Yep, there we go. Look at that. What am I looking at? Well, I'm looking at a major top on the yen. This is the US dollar yen and a drawdown. And obviously, from 152 all the way down, there must be some intervention going on or some traders getting bucked out of that trade. And we're seeing a significant move lower. It must be some conversation before the weekend starts by the Bank of Japan. That's what I'm thinking is going on right now. And you can see it's coming down pretty hard after a very steady incline for the US dollar. US dollar breaking higher by a dramatic amount. My theory is, I don't have the news in front of me right now, that the Bank of Japan is intervening much more likely than anything that we're seeing from the Fed saying they're backing off at this point. You would expect to see bond yields start to move on this as well, but the markets are reacting very favorably to this. There we go. You can see this dramatic move on the futures from where we were, almost to in positive territory. So somebody's thinking that finally somebody's getting their smarts here and moving things in the right direction. Anyway, before we get any further along in this discussion, there's a lot to talk about. I want to mention that there are some things that we have to say, of course, that the discussion we are having today is about investments, of course, and investing involves substantial risk, and past performance is not indicative of future results. Please consider this for educational uses only. Of course, use your proper judgment when investing. All right, there we go. We're in the positive territory. That was a big move on the futures right now. And let's see if I can bring up. Let's see what I want to bring up here. Let's see here. Look at that. Look at that. Wham! Look at that move. It's like off the chart. Look at that. I wish I knew what the news was. Let me see if something's popping up here. Nothing seems to be popping up here. Anybody find the news? I'm busy doing this, so usually I can't see everything all at once, but clearly something is going on with intervention on the currency side, so that we're seeing this major move here. You know, markets have been in this kind of movement for a while now, where any kind of information that we see seems to be reacting across and blowing out across all areas of the markets, whether it's from particularly the bond market and the currency market. That's what's leading things. And as a matter of fact, if you notice my theme today, my major theme, yen at 150. And as we see that the consideration is being given to a 40-year low on the yen versus the dollar, traders are wondering, like, what's breaking here? And that is a big issue. The governmental blunders that we're seeing time and time again, and the biggest one that we saw right in our face this week was clearly what's going on in the UK. I mean, Boris Johnson may be coming back. No kidding. That's pretty astounding. We saw that Elizabeth Truss, on top of the recent blunders that were made by the finance minister and her plan together, are looking or have resigned. Everybody is done, and now they're looking for a new leader there, and that created an extraordinary amount of turmoil in the market there. Under normal conditions, I think, if we didn't have a Fed that was so aggressive and so nonstop vocal about all the things they're doing, I would have expected that, a little blip in the both the pound and the gilts. Markets would have seen that as just a terrible thing and tried to absorb it and mull on it a bit, chew on it to see, what does this really mean? And is this going to go through? But what happened was an absolute knee-jerk reaction, looking to just sell on any news. Just sell first, ask questions later. And what we're seeing right now is a very similar circumstance, that every move on the currency front above certain key psychological levels, which was the 150 on the yen, really caused a big problem. The opportunity to get involved here has continued to be on the short side of the yen, so long dollar, short yen. There's no question about that. But look, as you can see, I'll just show you this. I'm just going to go back and forth with TradingView as well as TradeStation here today on this, just so we can see both in this line right here. But look, we came down. Everything went green, starting to rise up. The dollar starting to rise up again. So maybe it was, I don't know, a fat finger trade. Maybe it was something else. Starting to see it continue back up. And what's happening is we're seeing it fall off again, somewhat, not terribly, but not as bad as it was, but fall off again. So maybe it was a false positive going on there. Bond yields are marching higher. We know that. The fact is that we're seeing that bond yields are moving significantly to the upside. The 10-year was, well above 4% today, and the 2 years of 4.5 or 4.6, and the long bond is moving. And all of this has been the continuation of the conversation with regard to, that we're going to continue to fight inflation, and it's going to cause all sorts of problems if we have inflation. Therefore, our job one, an absolute job, is to fight inflation, and that is going to be significant and long lasting. And that has been spooking the bond market, which then has been spooking also the currency market, which has then been falling over and transmitting through into the stock market. Big issue right there. The thing that we're seeing that's very interesting, though, right now is the one thing that could break this trend, aside from the fact of major wait, Nick, are you saying that they're raising rates today? No, that's next week, right? Anyway, so what you have here is a situation where, sorry, I was just reading some text that came through here, or chat that came through. What you're seeing is earnings season is one of the things, aside from a slowdown of the role by various central banks that could really do things better. And we're seeing a mixed results. We saw this week, or last week, really, the end of last week into this week, financials looking a lot better. Netflix knocked it out of the park. There's no question about that. Tesla yesterday, not so good overnight, dropped down. Didn't really get squashed too badly, considering all things that are headwinds for Tesla. But what we did see was that this mixed bag, margin squeeze to a greater extent than was, I wouldn't say greater extent than was expected, but there's been a margin squeeze going on. That was somewhat expected. I don't think there's a lot of surprises there. I just don't think there's a tremendous amount of surprises that are going on in that area. But what you're starting to see is these discussions about constant currency discussions going on throughout the conference calls, because companies are coming in and saying, hey, you know what, we're about 8% off on expected net due to currency considerations. However, we have constant currency, we're up 6%. It's like that constant currency discussion is tough, because it's like when you talk about, I'm down 5%, but the market is down 30%, right? Well, you can't spend relative performance. You're still down. So when we talk about constant currency, the fact is what spends is the actual result. It's not what could have been, should have been, would have been, hopefully have been. The only reason you have constant currency discussion is so that companies can come out and provide for an insight that what would have been if it didn't, and what would happen on the back end potentially if in fact there is some significant amount of change in the environment. So right now, I just don't see a lot of good things happening with regard to currencies, but that could turn around and become a tailwind if in fact, look what's happening with the markets now. We're turning green. I mean, it's moving fast. Let's go back here and look at this. I mean, it's out of control. The yen's not moving so much. Yen's kind of stabilized right now, 151.45. So pretty interesting situation. I'm at a different desk right now, not with all my news sources right in front of me here. What else to watch? Oh, so the other thing I was going to mention was we saw earnings from Snap come out today. It's down like 25, 26% after the market. They're not giving any guidance. They're really pulling back on we're seeing that advertisers are pulling back significantly. There really is no sense that it's going to get better for a while, according to many of these companies. Many of the other companies in the genre have also pulled back dramatically. And what we're seeing is that the advertising space is really not holding up well for much of this. I don't think that's a surprise. One of the first things that gets cut during times when you're looking for opportunity to square up your finances is the advertising budgets. It's an easy one just to pull back on. It's an easy one just to say, we are going to cut back on some of this and see how things play out, because they could turn that on and turn that off very easily and very quickly without a lot of ramifications to anything. Now, you may say, well, isn't it a time when sales start to slow up, a good time to advertise? Well, yes, there's no question about that. But the fact is that you have to also look at the reality that when you have the opportunity to cut, where are you going to cut first? It's very difficult to cut personnel, because you have possibly excess payments that have to go with it. You have lawsuits that go along with it, all sorts of things that happen here. However, the fact is that that Hang on a second. There's some news coming through here that I'm trying to look at. Okay, sorry about that. So, pardon me. There was just a lot of. I still have not found the right information. I was trying to sort through the text that just came through to find out if there's anything about Japan's intervention, but that didn't seem to come in. Anyway, so here we are in the situation where we talked about constant currency and margin squeeze, and we talked about advertising, and the easiest thing to cut is advertising. And when you have advertising cuts that occur, again, against the first line, it's easier to do that because it's just a quick switch versus the other things I mentioned about employment. So that's just in a nutshell. What to watch right now. Okay. And by the way, let me stop for a second and let me mention that if you would, I'm really looking for your names, your symbols, things that you're trading. There's plenty of people in this room today, and I want you to tell me what you want me to look at. I'm gonna pull a blank when we go into the stocks, in the futures. Please start filling up the chat. And the people that haven't done it before, doesn't matter. I'm not going to mention your name. I don't think I will, at least. Put your information into the chat of what stocks that you want us to look at. And maybe some things that you don't own that you're thinking about, or questions that you have. Put that in there and we'll do a quick analysis on a technical basis of the charting of what's going on. So I'm going to save that for you here. I mean, I have a few names, but I really want you to give me the names of things that you're looking at, that you're interested in, that you own, that you're not sure about, that you're questioning, do I sell at this point? What do I do? Some of the things to watch, and I think this is important. Russia. Obviously, Russia's kicking up dust. The annexation that we saw, and now the martial law, and now the evacuations. It makes you want to question what exactly is going on here. Fact is that it's a bad situation. There's no question about that. It's a very, very bad situation. Unfortunately, there is really no good resolution. Like we talk about advertising, you turn on and off. You just can't turn this war on and off. The problem you have here is that really we are entering into territory that we haven't seen since, what is it, the 50s, 60s? And then Cold War throughout, the later years and a few years post. And it's really not a comfortable thing for the world, especially due to the fact that we are trying to win this war with economic sanctions in a way that is actually hurting us. So you look at the greater good and you look at the situation, you're like, well, we're trying to save democracy, I guess is our excuse here. We're trying to protect the little guy. We're trying to make sure that that democracy maintains, not just for Ukraine, but also for all of Europe. And then, where's the spread after this? And the whole thing is mind-boggling to me of what exactly our intentions are, and how we look at things. But bottom line on all of this is that Russia is a big issue. It's causing all sorts of dislocations in areas around the world, adding to the fact of all the things that are happening already. It's really a very uncomfortable thing for markets to wake up every Friday and then Monday, we're wondering, okay, did anything happen? Waking up, when I say waking up Friday or going to sleep Friday, when the close of the market happens on Friday, wondering, what, do I want to hold anything over this weekend? I got 2 days that I'm stuck, can't do anything. Monday, waking up with, sigh of relief, and then making it through the rest of the week. That's kind of what investors are feeling right now. One of the things that's really interesting that's not really playing with all this is the VIX. We talked about that. It's still at 31, higher than expected. Volatility will pursue for a long period of time, given that fact. But, when you look at it, it's really not as high as you would consider it. Thinking about, the conference is going on this week and ending, I think, Sunday with Prime Minister Xi Jinping in China, and the conference about him possibly being in for life and all the things that go along with that. But, we're going to see the biggest issue probably next 2 weeks, aside from all this other crap with currencies and governments and all of that, right? Aside from all that's going on, a quick check, I'm just going to slide it on over and look at this in a big fashion. Is that big drop we saw, a relatively big drop, 151 from 150, just about 152, give or take a couple, just down one. And now we're starting to inch back up, and look what's happening on the top here, right? We're starting to see this red again. So that move, we have to now question. as to what it was. We'll find out soon enough. But next week, the earnings deluge, we have a lot of the technology companies coming through. And if Snap was any indication of what's going to go on for social media, that's not a good thing. And then on top of that, we see some layoffs and some concerns from companies like Microsoft, of course, and Google. Is Tesla really a technology company or a car company? Is Netflix a technology company, or are they content and entertainment company, streaming company? You have to wonder which ones those fit into right now. And you can make a case for either side of it. Netflix, I think the big issue was, and this could be to the benefit of the markets, it's all about the expectations. When you look at markets, when you look at stocks, when you look at what goes on, really the biggest issue that you see outlying performance is when you post expectations and reality and they don't match. When we have a situation where expectations are for X and the results come in close to X, no matter if they're good or bad. In other words, if you have a company like some of the financials last week that showed a 45% reduction in overall trading revenues, but expectations were that we're going to have a 45% reduction in trading revenues over year, it doesn't matter so much. It doesn't hurt them so badly. When you have a situation like Snap, where it comes in significantly under in total revenue and their outlook is questionable, and then you look at Netflix, that goes from 1 million subscribers on the estimated side to 2 million, those are big outlier moves, and that's why you get those big kicks in the value. So it's all, sometimes a lot of traders think, man, those were really bad numbers. How come the stock is up? Seriously, it's really a very important thing to wrap your head around. And that is that it's all based on what was the expectation and then what were the results, not just the results on a standalone basis. Very important. I'll mention, by the way, and I'll also mention that when I do this, that you have the opportunity to be looking at this is white on white. This is not working for me. Let's go over here so I can see what's going on. There we go. I'll make this a little bit bigger. So, you can get all the indicators that we have over on, you go over to TriggerCharts.com and just click any of the buttons. It will take you right to where to how to and where to install. A couple of changes are being made, nothing major, but some coloration, clarifications, some things that you need to know. But you're going to get, here's the great thing. You get 7 indicators for less than the price you were paying before for the Commander Series at when it was at TradeStation. We know that's over. It's 21 days now over. It was a great run while it was. What we did was we re-upped and changed and enhanced many of the indicators to work not only on TradeStation, but as I told you before, right? TradingView is right here, and that's something that's moving along. And you got all sorts of different e-signal. You can use it on NinjaTrader. There's about 5 or 6 different platforms that is available to work on, but you get a lot more. As I mentioned, and I'll show you, different than you saw on TradeStation, you have things called the Navigator and the ratios and zones and all sorts of really cool things. Let's make this really big for a second here on this and make this bigger on the bottom. You have this is an upgrade, if you will, or an enhancement to what we had in terms of our previous with TriggerCharts. It's a lot of similar trending and oscillating indicators, but more. You get the yield zones and you get the ratio, and up here you're getting a lot more too. So okay, good question. That was a good question. James, you could use the indicators on TradeStation, NinjaTrader, or TradingView. And he said, he's asking a question, but I can't use them on both. I think you can use these on any of the ones one at a time. If that's what you're asking, you can't have them both running at the same time. It's one platform or the other. Concurrently. Yeah, the different plan for TradingView, but just let me know about that. Send me an email about that. I'll show you where to go to get more information about that. Okay, James? Question came in also, do you have trading videos? Yeah, there's a good amount of TradingView videos over on, well, if you go over to Candid Commodities, you can look there. There's a ton of trading videos. Obviously, what we do every Friday here is also available. There is a TriggerCharts YouTube channel that just has a lot of stuff on there, but also on Candid Commodities, those are older ones with the quote unquote older products. But Candid Commodities has a good pile of FAQs, tutorials, information, education, I think that covers all the things that you have there. Okay. But you know what? The thing that's really nice about this, and I'll end on this, is that the extra pieces of the puzzle that you get here increase, at least I think it does, increases your confidence when you're trading. And that's really an important feature of what goes on. Okay. Question came in. I thought this is an interesting question. Why are futures on the move overnight and they fail the next day? So I guess we've seen a lot of you can envision this. We don't have to see a chart for this. We can envision, hey, overnight we do one thing and then all of a sudden you get towards the morning, things change dramatically. So some of the things that happen with futures are that overnight trading is impacted by beyond the close of the markets in the U.S. It's first impacted by the markets in Asia, then it rolls over to Europe, then it starts over here. The optimism, the pessimism that rolls over from each of those is really important to consider. And what happens here is that there's a squaring up that goes on at 9:30, give it into 9:30, like we're seeing right now, that we're squaring up and going up once again. This big move up and down that's happening. And let's see if I can find this. Yen is not moving at all. So there's just other things that are going on on the outside of this whole thing. But when we see that there is a big move, it is we're finding a lot thinner trading going on right now. So you're seeing a lot of more range moves right now. And the fact is that when we look at what's happening with trading, it's basically, you get the 8 o'clock move because Asian markets in Japan opens up. Then you get the 4 a.m. move with various European markets that open up. You start getting into the time when our markets up. And then what you get is 11 o'clock, you start rotating around, right? You start getting the closing of the markets. Now you get 11 o'clock. Then, of course, you see some movement because a lot of traders that were trading the European markets and focusing on that are now moving over to the U.S. markets and then moving their money over in terms of positioning, opening, closing, shorting, opening, trading, covering, whatever it is. Okay, let's see. Quickly, weaker this week, industrial production, housing starts, building permits all week. Housing NAHB, the National Association of Home Builders, terrible number, 38. Outlook for homes, just gross. Next week's a big week, okay? Next week is a very large week. And what we have next week is consumer confidence in Case Shiller. We have the third quarter GDP coming out, the first look at it. We also have durable goods coming out and personal income and PCE. This right here, the Fed's preferred measure of inflation will be coming out next week. They have been crying, screaming, complaining, just create all sorts of issues with what is, inflation. It's not stopping. This is the one that they look at right there. This is the one that they look at. PCE prices. Remember that Friday of next week. That's going to be coming out. All right. I'm asking you once again, I'm going to go up the list. There's like 5 stocks that you mentioned here, and we'll talk about that. And let's just go look really quickly. Wow. There's sloppy action. And that's a big move. Think about that. 3640, we'll call it, right to the bottom. 3640 to 3680. That's a 1.1% move to the upside there. Right? Is that right? 40, no, more than that. It's probably a 1.4% move. Wow. Pretty significant from the bottom there today. Okay, so MS, we had that one come out. So MS, Morgan Stanley. Let's look at the daily. I like to look at the daily because it just gives you a better swing notation of what's happening here and how we can really look at this in a very good way. Morgan Stanley was hit harder than some of the other stocks in the same genre. When I mean the genre, the financials, the big banks, JP Morgan, Bank of America, which owns Merrill, Morgan Stanley, they have a lot of significant inroads, or they do a lot of business in Europe. You would expect that possibly wasn't, very helpful. We saw that move to the upside, of course, after the earnings last week of some of this. Expectation was very high and then just rolled right down. Currently trading up a little bit today. I'm kind of curious about something. Yeah, the banks are up today. Yield curve moving. Oh, that's not right. Do that again. Yeah, let's go to GS. Yeah, all the banks are moving up today. See, in the pre-market, Morgan Stanley. Back to that one. You have some downside, and then you go nowhere. This is a terrible looking chart. There's no question about that. Where's our levels? Well, if we just kind of click on our left side and look for levels here. The 75s, 75.50, you start getting below that and you're going to probably start scoping out those lows that we saw back down here. Not a very strong chart by any means, not at all. And I think that the big issue right now is there's a concern that if rates keep going up at the rate they are, they're going to have to increase their deposit payment outs, to people. And then what happens is you're going to see some, what we saw a 25-year low in mortgage applications. That's a problem. DNA was another one. Just terrible looking charts. A lot of support here. 1, 2, 3, 4, 5. Back to May. Support down here somewhere in about the. Is this the right stock? Yeah, Ginkgo Bob. Yeah, this is the one, right? Probably 230 is some support here, give or take. But below that, this is nothing. It's just a huge bottom. Good consolidation. If I look at this, I would say that, hey, I like to draw my boxes. Look at this great consolidation right around this area here. You can break above, below that. You got some opportunity either side of the trade. I saw 2 more that came through. Yeah, indices. Yeah, indices are again. I would not. Right now we're seeing a big move in the upside. Yen is coming down again. Kind of look over here again. It's been moving pretty strongly. Not in a very big range. We're still up significantly from where we are in the morning, right? It was 150. You got to get back down to there to get some real action going. Right now, it doesn't seem like there's real action, except in fact, if the VOJ has announced that they're going to do something, and I still don't see any news on any of my base sources coming through. We got a little squaring up into the open though that's going on right now, so that's interesting. GNRC is something that I was looking at for a while. I talked about this as a great stock way back when, and what's happening now is not such a great stock. I said a while back, if you break this 250 line, really I have some concern because it's, you look at the above, the below, and take the average, and then look what there's some support. This thing just dropped off a cliff a couple of days ago due to the fact that one of their suppliers, or one of their not suppliers, one of their customers is possibly going through bankruptcy, and there's a big question about that. This is a stock that was, $600. It's $100 now. They sell generators, for God's sakes. And this is one of those stocks you want to look at probably towards the May of each year as a seasonal trade into hurricane season. So something to look at there. The other one that I wanted to look at, of course, today was Snap. Snap down 27.9% in the pre-market. These gaps are just awful. These are things, if you see these in a chart, I just stay away from these things. This is just you can't have confidence when you see these kinds of humongous gaps on a regular. There's just one chart, the same date range that we looked at for all the other ones are showing 3 monstrous gaps. One right here, one right here, one right here. And forget about today, you're going to be off chart. It's trading at 7.8. That's way below where we are on the chart here. So that's a big issue. And of course, we can look at Meta, Facebook looking kind of the same, trading down about 4% today. That's not going to help the NASDAQ do anything good unless a miracle happens with whatever's happening with the rates. Hey, listen, thank you so much for joining me. Listen, it's going to be a rough and tumble day today, I think, with what is going on with currencies and all the things that are happening with rates. Stay tight with your levels. Make sure to keep your sizing small, and we can always trade another day, right? But go over to TriggerCharts.com. Lots on there to click to find out how you can get all of these. Make sure to sign up. Make sure to subscribe. Lots of great things going on with our team up with Canada Commodities and Steve. Thanks so much for joining me this week. I'll see you again next week.